Today, I'm going to talk about a topic that comes up quite often, and that is how do you qualify for a VA loan when you're separated from the service? Hello, this is David Xie with the Xie Mortgage Team. However, today I'm going to offer you 3 tips that I've kind of learned being in one of the largest military markets in America. And these 3 tips are going to be helpful for anyone that is in my area or even outside of my area. VA loans are designed for veterans and surviving spouses that have served our country, and thank you for your service. I really do appreciate it. And 3 of the tips that I've learned that I'd like to pass on to you guys today are this. Number 1 tip is you can ask for closing cost. With the closing cost, it's typically going to be 3% for prepaids and debt reduction, and then you can also ask for an additional 3 to 4% on closing cost. There's a calculation to it, but the tip that I really want you to focus on is the 3% that can be used towards prepaids and debt reduction. A lot of times you may have some debt that you've accrued, and in times where there's not a lot of closing costs being given, which was like last year, and now we're starting to see a lot more closing costs come around. Let's just say you qualify for maybe a $200,000 home. However, you want to get up to $250,000. You've got a car payment that you've had open for the last 4 years, and when you took out the loan for that car, it may have had a higher payment on it. You only owe about $5,000 on the car loan now, and let's just say the monthly payment is $600. Well, that could be the difference between you qualifying for that $200 or actually in reality $250 to $260. We can ask the seller to pay for some debt, lower your debt to income ratio, and then qualify you for the higher amount. The second thing is grossing up non-taxable income. So this is a tip and trick that us VA loan specialists use all the time. If you're active duty, I know we're not talking about that right now, but 2 of your incomes are non-taxable, like your BAH and your BAS. However, if you get out, maybe you have some disability. Maybe you have some income that is non-taxable. And we look at that based on your tax returns. And if we can see that that income is non-taxable, we can actually gross that income up by 25%. If you're getting $1,000 a month in disability, and with the gross up of 25%, that would give you a qualifying income of $1,250 to qualify for your loan. So that's a huge improvement from the $1,000 a month. So make sure your lender, if you're not using me, is actually taking this information and grossing it up, because unless you're in a military community like myself and you do a lot of VA loans, this could be something that is not something that they know about. And the third thing is we are in a market now where you can ask for closing costs. And the typical closing costs, you'll hear agents throw around numbers like 3%, maybe even 5%, or whatever it may be. Definitely leverage, the market, being that it is a buyer's market now. It's really starting to turn that way. And this may be temporarily or short-lived. If you're out there shopping for a home and you're using your VA loan, be sure to ask for closing costs. Number 1, that can lower your monthly payment. Number 2, it gives you the ability once again to pay off some debt. It can also cover some of the costs that would help you in the future of going into the home, like, upgrading your insurance policy so that you have something like mechanical breakdown. It can also help you if you were to want to buy a home warranty for 3 years. And that's really crucial, especially if you're moving into a home that you don't know anything about. Anybody that sells anything typically is going to have some idea of what's getting ready to break or how old something is. And they're not going to come out to you and just say, hey, you know what, you're buying my house, but the water heater's 11 years old and the AC system, we basically rigged it because it had a leak in the Freon line. They're not going to come out and tell you that stuff. They're not going to tell you that the electrical may need to be upgraded, because if you have a wife like mine with really long hair, she blow dries her hair a long time and it trips the circuit every time, right? So getting that home warranty plan is really beneficial to you because it will cover a lot of the systems and even appliances that break down on a house. These are the 3 tips and tricks that you should use on VA loans. And if you have any other questions about VA loans, and you're out of the service, I'd love to help you. My name is David Xie and I'm with the Xie Mortgage Team. So I'll talk to you later. Be sure to like our video, give us a thumbs up, subscribe to our channel because we give you a bunch of really good content, and comment below because I love to see your comments and I'd like to answer them. Talk to you later. Bye.